Good afternoon to everyone. Thank you for joining us for today's webinar. Today's webinar is our second webinar of the Africa Proptech Forum webinar series. We have for the rest of the year, and this will be the second in the series. The first one was very well received. There were some great takeaways and things that we really are trying to take and progress from a market standpoint. So just to give a brief introduction to today's webinar, it's a focus on boosting funding and reviewing Proptech strategies in Africa. We're very fortunate to have an esteemed panel, both from an operational startup perspective, but also from an investment and VC perspective. I'd also like to thank our partners who are also helping us in driving the adoption of Proptech across Africa. That's CESO Global, Proptech Africa, Kenya Prop, MEST, SA Proptech, Proptech Uganda, and Python Housing. And yeah, I think it's really a testament to the movement that we are trying to create in terms of driving the Proptech discussion forward. Moving back to today's discussion, focus on boosting funding and reviewing Proptech strategies. I'm going to hand over in a couple of minutes, or in a minute or so, to Kevin Teregordum, who's the co-founder of Proptech Africa and a noted real estate advisor. He will be moderating today's session, and to help him drive the conversation, we have Keith Jones, who's the founder of SW7. Kunmi Ajiboye, Head Products and Technology, PropLab Africa, Nigeria, and Kweku Essien, Vice President of Partnerships, CESO Global, Ghana. So we've got quite a diverse panel, and we're looking forward to the discussion. I think at this point, I'll hand over to Kevin. Kevin, I think you are good to go if you switch on your camera as well as your audio. Sorry, I think Kevin has just rejoined us. Kevin, are you there with us? I'm going to hand over to you now.
Hi, Kafir.
Excellent.
Hi, everybody. Great. Sorry, apologies, technical issues on my side. Kafir, I believe you're in Zambia, so greetings to you in Lusaka. And I would like to welcome everybody who's on this panel, and also the attendees and the viewers around the continent, but also beyond the continent. So today we've got three panelists. Nearer to me is Keith Jones, who's in South Africa, and we also have Bukumi Ajiboye, who's in Lagos, and Kweku Essien, who is in Accra. So, gentlemen, would be great if you can come online as well, if you can switch on your cameras. Welcome, everybody. Greetings to you all. Hope you're keeping well.
Yeah, thanks for having us.
Hi, everyone. Thank you for having us.
Hi, great. I think, obviously, we're going to be talking about funding. Bottom line, I think this funding is not only to do with PropTech. I mean, funding has always been an issue on our list 10, 15, 20 years ago. And it's something which we need to get to the bottom of it. But before we get into that, I would like you, if each one of you could just quickly introduce yourself for 1 minute. Yep. So I'm going to start with Keith. Keith, if you wouldn't mind introducing yourself.
Hi, we are SW7. We're a tech accelerator. We've been running for 6-7 years. We worked with about 300 tech businesses. Worked with all the banks. I ran my own IT business, listed in London. Did a couple of fundraisers. Did 11 transactions in I think under a year after we fundraised. We've been working with quite a few PropTech businesses, helping them grow and scale and launch. And we work quite closely with Amazon. So we've got a good access to a community of funders. We've got a community of mentors, 100 CEOs that mentor for us. And we connect with about 20 or 30 funds directly.
Awesome, fantastic. Thanks a lot, Keith. Bukumi, hi.
Hi, Kevin. So my name is Ajiboye Bukumi. I am Head Products and Technology at PropLab Africa. We are a startup building B2B real estate PropTech products for organizations that have large real estate portfolios. One of our products is RampFi. RampFi is a facility management software that is used to manage the entire supply chain for facility management and management of real estate portfolios. So that's me. I'll hand it over to Kevin.
Thanks a lot, Bukumi. Kweku, Sian, I was going to ask whether you related to the famous footballer.
Well, I am not, and I did not also, get any of his legendary skills as well. That's why I'm here with you on this platform. Maybe in another life, I'll kick a ball better than I do today. But I am a vice president of partnerships for CESO Global. CESO Global is a one-stop shop platform for property and property-related transactions, currently operating in Ghana, Nigeria, and South Africa. And essentially what we're looking to become is two things: become a world-class brokerage firm, as well as the sales force really for the property sector as well. So again, pleasure being here with you all.
Great, thank you. Thank you all. Just maybe before we get into the funding, question to I'll start with our friend in Lagos, Bukumi. We hear a lot these days. I mean, the last couple of years, obviously, we've been hearing a lot about PropTech in Africa. But a lot of people, when I speak to people, depending on who I speak to, a lot of people are confused about PropTech, this definition. So if you sort of could give us, before we even get into the funding issues, how would you explain what PropTech is all about to somebody who's new?
Well, I would say, as we all know, the reason why PropTech is simply because property, real estate conventionally is more or less like a very stagnant or seen to be stagnant industry. So when things like when PropTech is being defined, it's defined in such a way that we're using technology to actually improve the current know-how of how real estate is being run. One of the examples I could give is the renting space. If you look at like the Teregordum, which is a company here in Nigeria that does renting, what they have done is that they're connecting direct renters or buyers to the landlords or the agencies directly without having to go through, like a normal person like back in the day would have to visit 10 or 15 apartments to know which was going to rent. Or you could just like through any of these platforms, you could just go online and search for the property that you are looking for in different locations. So that's one of like the simplest ways of describing what PropTech can do or what it is. It's pretty much improving the way real estate is now, with the obviously with the advent of technology and applications that generally improve the way we see or engage with the real estate space. I'll also say that PropTech is also a matter between execution and obviously fintech. So there's a lot of fintech aspects that's to be PropTech. So closing deals and recognizing spending patterns. Obviously, that's the marriage between PropTech and fintech. Fintech obviously is the financial technology sector, and PropTech cannot be void of that. So it has to be some collaboration between both. So that is how I would define PropTech, and I hope it pretty much explains where we are.
And Bukumi, I mean, can you just give us a state of what's happening in I know you cover pretty much a wider range of regions in Africa, but let's start with Nigeria. What's the uptake as we speak today in Nigeria when it comes to PropTech?
So PropTech is on the rise in Nigeria. It's on the rise in Nigeria simply because simply because it's more or less inevitable it's more or less inevitable for most companies. Like most real estate services companies are beginning to incorporate technology so that they can grow their operations, scale their performance, and all of that. I'll give an example. One of the examples that we have is a company like Fillmore Realty. Fillmore Realty has imbibed so much technology in their own process to ensure that they are reaching more customers and providing and knowing how their supply chain is performing at every single point. So it's more or less, like I said, it's more or less inevitable for these technologies to come into place. Another company I could mention is a company like Estate Intel. What they're doing is that they are gathering so much data within the real estate space so that companies and conglomerates can make better decisions in knowing where to invest in property, where to buy, where to set up, how much property is redundant in Nigeria, how much property, what is the landscape of properties being built, what the renters market is, what the buyers market is. This is data that was foreign to us about 5 years ago that you needed to like get a team of people constantly to provide as a project to provide such data. But these guys are actually sitting down and created a company around that to actually solve some of these issues. So those examples are pretty much a way where a very, very direct route to explain how like Proptech is moving really fast. Obviously, look at investments in Proptech in Africa. I think there were about, if I go to my research, I know there were about we are seeing an uptake of investments, even these COVID times. I think it was a fraction of like a couple of $1,000 that from 2019 to 2020 in the reduction of Proptech funding still being pumped. Money is still being pumped in Nigeria and Africa, which shows that there's a huge importance for Proptech. Sharing the context is a subset. I believe is a subset of Proptech. So in context, for instance, now there are more technologies being imbibed, new supply chain kits that are being brought to ensure that obviously profitability is high and obviously spending is low. So that's where we are in Nigeria right now in terms of Proptech landscape.
Great, thanks, Bukomi. When you spoke about data, I could see kind of a smile from Keith. Keith, I'm going to move on to you. I know you're a data guy. Yeah. So looking back, I remember, when I started my career in Africa 20 years ago, there was, technology was minimal across the continent. Getting data was so hard. It was basically you had to fly in yourself, go and meet people, go and measure stuff, and really sort of cross-check. So it was really, really hard to get data. So I wanted to have your perspective of what are you seeing from a data perspective for the continent. Yep. I know you're also involved in South Africa, but you can give us a perspective of South Africa, but also beyond the South African borders. Yeah.
Yeah, so we were mapping out the size of the digital economies and also the drivers. And I'm gonna make a wonderful statement to say that the largest single driver of the Proptech market is Facebook. And now I'm going to explain why. So in Africa, one of our biggest challenges is the rate and pace of urbanization. So we've got these massive urban clusters that are coming. We talk about our population doubling between now and 2050, and then we talk about 50% of our population living in urbanized areas. So what we did is we mapped out the population of each country. We then mapped out the cloud skills in each country to say how many people have got cloud skills, and then we started looking for indicators to say what's going to tell us which regions are tipping and growing the fastest. And the funny thing is if you move into an urban cluster, your quality of life goes up. You get access to internet, but you also become accessible to the digital economy, and you get Facebook. You get a smartphone and you go into Facebook. So the rate and pace of Facebook growth in each country tells us how quickly that region is urbanizing, but it also shows us the demand that's being placed on property and actually how quickly those urban clusters are growing. So in Africa, we don't have data, and so we have to be quite creative in how we start to measure and analyze the growth of our market. So, In South Africa, we're right sort of 40% urbanized already. So we have a 10% shift. And if you look at Nigeria, they were 20% urbanized, and they've gone up to like 35% urbanized in the space of the last 2 years. So if you look at the growth of Lagos, just Lagos on its own, it's off the hook, the pace that it's growing at, and that creates pressure on supply chain, property, everything is led. So yeah, so we're sort of seeing certain established. The South African economy is quite established. We've got a couple of very big players in the market, and they dominate, and they don't want anybody else coming in. And then the flip side is you go to somewhere like Nigeria, and there aren't that many big players, which means it's a greenfield site, but then the market's not that easily accessible. So even though we're in Proptech, the scaling strategies you'd have in, say, South Africa and the scaling strategy you have in Nigeria would be very different strategies. Cool. Is that, yeah?
Thanks, Keith. Thanks for the intro on your side as well. Moving on to my friend in Accra, Kweku. If you can tell us, how has the market evolved here in Ghana from a Proptech perspective? How structured is it? How many players are you meeting or are you seeing, and how receptive are people or corporates to Proptech?
Sure, and obviously very interesting for me, and Seso operating in Nigeria and Ghana as well, so have good insight on both sides. And what you find, what we found was that obviously the opportunity is obviously quite vast. And when we started as a company, it was to sort of really put the property developer at the core, because what you find is that, and especially within our space, the land sort of issues are really where sort of a sticking point, and really what we're seeking to solve. And so to do that efficiently, and to sort of really to expand quite a bit rapidly as well, we sought to work with credible land developers who had access to, who are building, 1,000 units or so. And so easier to expand with these developers quite quickly. And typically, these developers also have credibility in the market, have done sort of their checks on the properties and whatnot as well. And so we started with these individuals, and what we're seeking to sell to them really was the CRM tool, because you find that a lot of them are utilizing Excel sheets really, or best paper, to really organize their data with respect to the units that they hold, how they manage the property, how they manage their team, and whatnot as well. And so that is still the solution we have as well. But what we found within the market as well was that the biggest issue for any developer is sales, right? So although the CRM tool was very useful to a lot of them, for a lot of them, really at the core, what they wanted was to sell their units. And so we quickly adapted to that as well. And so that's why I mentioned we're seeking to be two things. I know some people say it's maybe you should focus on one, but I think those people don't understand the market as well at all, actually. Because at the end of the day, both things are sort of have synergies within the two of them. You're selling units, you're selling property, and on the back end, you have the CRM tool, which is sort of keeping all that data, which includes the units of the property, the sort of land documentation and whatnot as well. And so what we found was that obviously, like everything else, as you start, it's a bit slower than you want. But we've quickly sort of expanded to about 85 developers, about 8,000 units within sort of these two countries. And I will say, although obviously COVID, a terrible phenomenon, but like any phenomenon that happens, it changes the mindset of people, right? And so what you found was that a lot, we actually within Ghana especially, we rapidly sort of expanded our growth there after sort of COVID happened, because a lot of these individuals realized that they had to sort of become more tech savvy. They couldn't do the big giant billboards again because people weren't driving on the roads. They realized as well that they needed to diversify as well, and it can't only be the local market. Maybe the diaspora market as well is something that perhaps I should focus on as well, especially now with the advent of more folks in the diaspora looking to come back home or purchase back home, or understanding that, you know, even during this COVID time, you know, being in Ghana perhaps was even safer than being in New York or in London, right? So you find that all these different dynamics have changed sort of the thinking for a lot of folks out there as well. It's put CESO in a great position to succeed moving forward.
And quickly, I mean, you sort of said, okay, obviously now with the COVID crisis, etc., so people sort of get it, the developers get it. So are you saying basically the people you're talking to, because very often the last couple of years we've heard, you know, developers were driven by people who've been in brick and mortar for the last 20 years. And when you talked about Proptech, it was basically, you know, something IT related in the basement. You know what I mean, yeah? So now do they understand that that's front end, or do they still see it as a sort of back end support to their core activities?
Oh no, I think they very much obviously the savvy ones see it as very front end. I mean, what you find with anything else, you know, is that and I understand that a lot of these developers, what they know is they know how to build, very good at that, and typically don't want to even think about anything else, right? But you find that in Ghana, and I think it's even similar in Nigeria, a lot of these developers also hire their sales team. Sort of have a marketing team as well there, and have their admin and what. So they have those elements within the business, right? But a lot of them typically don't even want to deal with that. You know, they would prefer if someone else took on that task, which is something we're finding. We're taking on the marketing side of things and obviously the sales side of things for certain developers as well. On the diaspora end, and probably will take over completely for some other developers. But it very much so at the beginning, and even for me, I realized and I had to adapt the way I talk as well. You know, sometimes maybe I talk too much as well. I had to maybe simplify the way I talk. But what you find is that once people are living it, you know, I just think of my dad who never really used Momo before COVID. You know, now he uses it, right? And you find that that is really what's happening. People who never really used Zoom before, now Zoom is something that is innate in everybody's mind. Everybody from a young kid to an older, sort of the older folk as well. So what you find is that obviously COVID, very, very terrible thing that has happened to the world. But like any other phenomenon, it will shift the way you think about things. And so certainly for a lot of developers, it has become front and center. And they are finding that, you know, in order to very much hedge against anything that can happen in the future, you do have to sort of have a strong tech strategy, right? As well. So yeah, certainly.
Thank you, and thanks, Kweku. I mean, Bukumi, I mean, do you subscribe to that the value of data in Nigeria when you speak to your counterparts in Lagos or Abuja or elsewhere? Do they understand the value? Do they get it? The value of the data?
Okay. So I would say yes. I mean, there are lots of, like, one of the encouraging things we're even seeing in Nigeria is that state governments are beginning to understand the value of data as well. I don't want to mention any particular states, but what's happening right now is that some of them have been collecting or knowing the amount of assets that they have. Or it sounds crazy not to know it, but like a lot of our states aren't necessarily understanding the value of keeping records of assets they own. And also like assets and also their statuses as well, because like I said, like these things help them understand how they can plan the future, know how much they need to spend. They need to spend in keeping the states going, and also knowing the replacement values of these assets they're also trying to replace. So some of these crucial data points are essential to them are the ones they are really, really concerned about. There's some types of data that you present to these guys and they're like, it has nothing to do with me. So one of the core things that as a product person or someone who's building a particular segue or a particular product or process is that you have to understand customer, or you have to understand who you're presenting these data points to and what they can use data points to do. So far it's encouraging. Like Kweku mentioned, like things are beginning to shift towards the tech side. I think it's, like I said before, it's inevitable because of where COVID is. There are lesser of human interactions, and people are now building processes
I agree. I mean, I totally agree. I mean, my sort of own experience on that is if I go back, 10 years ago, or even, 5 years ago, if you look at the retail evolution in a lot of countries, for example, a number of retailers got it wrong because they never had the hardcore data. They had some numbers that were floated around. I mean, the typical thing, like, if we were at the conference 10 years ago in 2011, and maybe some of our friends from API would remember, we're talking about, I remember the retailers were talking about, Nigerians drinking champagne in Lagos, but then, how many, what do they drink, what value, how often, etc. So I think that's the way to go. And I'm going to move on to Keith on that here. When we talk about data, I get the impression, okay, obviously the last couple of years, we're hearing a lot about data as the new, new gold, new oil, whatever it is, etc. We're seeing unicorns in other parts of the world and all that. But then too much data. I mean, what do we eat? Open buffet data or a la carte data? I mean, this is the thing. I mean, I know we haven't got proper data, we're building it, but how do we make sure we get the right data that would be suitable for the business? I mean, what kind of data should a business focus on gathering and eventually analyzing, etc., to make decisions?
So I don't know if anyone on the call is familiar with the jobs to be done theory. So if you Google the hashtag JTBD, jobs to be done. So the problem with data, and I'm a data geek, is you can just go and grab and get excited by the data. If you don't understand the job to be done with the data, and this is the business I listed in was actually a business intelligence business. So we were one of the first guys doing AI, even before AI was trendy. There's so much data available. You can go and grab so much data. You can spend so much time cleaning the data. If you don't understand what the business case is to increase the income statement, then the data's got no value. So the data on its own has no value. So if you don't start with the end in mind, if you don't know what you're going to do to drive the income statement, to lift the value, then the data has no value. So the value is only created by the action that's created inside the business. If there's no action, there's no value. So data is the new oil, as long as you act on it. So I'm talking about investment, because it's the first thing you do when you go to investor is you say, here's the opportunity. And then the first thing the investor says is, I want evidence-based information. Show me. Show me that you can scale. Show me that you can acquire customers. Show me how big the market is. Show me where the market is. Show me the data. So the data then tells a story to say, well, here's the size of the opportunity. Here's where we are as a business. And here's the data to show how our business is growing. Now that data has the job to be done in that particular instance is I have to sell the opportunity to the investor to say, here's how big the market is. I have to sell the traction I've created to say, here's our business executing in that space. And then I'm going to show you the next set of data is to show you, here's how I can take your money, and here's the evidence-based, to show that I can scale my business. So the data, yeah, I'm the worst in the world. When I see data sets and I get excited and I start integrating them, and like the whole Facebook thing. I downloaded 200,000 data sets. I actually snapshot the size of the African digital economy every 3 to 5 months. And I like the data because it's exciting. It shows me the size of the markets. But I was working with a fund reached out to me internationally, and they're raising quite a large couple hundred, a few $100 million fund. And they said, let us use the data to show everybody the size of the opportunity in Africa. So the data was sitting with me. It had no value. And as soon as they apply it, the data has value when it's applied. So with data, start with the end in mind and know what you're trying to do. I've worked with so many businesses that gather the data and then they take it to the business. The guy's going, well, that's interesting, but I'm kind of busy right now. And you say, but if I can help you do X, Y, Z, and X, Y, Z increases your income statement. So if you look at what Kweku's doing, he's creating the data that proves access to the market. So the sales pitch is just straightforward. I have data that allows you to shift more units. I mean, the sales pitch is it's there. It is. You can sell more units. And the guy goes, okay, where do I sign up? So yeah, start with the end in mind with data. It's a huge issue. And any investor, they use the language evidence-based. So I will make an investment based on evidence, and the evidence that you're going to show me is the data.
And Keith, on that note, I mean, I'm going to stick with you for another question. Is obviously we're moving from an era of no data on the continent to an era where technology is enabling us to capture as much data as possible, data which we probably thought unthinkable 10 years ago, or even some of us 5 years ago. And then at the same time, you've got this global GDPR coming in. What are you seeing in terms of any impact on capturing data with subscription to GDPR across a number of countries? So
if I'm going to speak on, I make these wildly sweeping statements. So most of African businesses are scale of B2B. We see very few B2C businesses that are scaling effectively. The B2C requires massive investment upfront, and it's really difficult to scale. So I would say most African businesses end up B2B. The GDPR doesn't apply to B2B, it's the first rule. So GDPR doesn't affect business data. The second thing is I don't know how many websites you go onto, and since GDPR came in, it says accept all cookies. I've been tracked and spammed more since GDPR than before. Because every time I click on just get that thing out of the way, I accept cookies. And they go, yeah, well, we've got this whole big thing behind you that says we're going to track you, tag you, email you, put you on our newsletter list, and send you a whole bunch of stuff that you never asked for just to get into our website. So, yeah, and then it's also actually what's happening is if you look at what's happening through ISPs, through digital data sets, through websites, through website tracking, our public data sets are just exploding. I mean, you can get any kind of data from just about anyone super quickly these days. So I don't see GDPR as impacting it. The rate and pace of the data is becoming available online, and web scraping tools. If you put something up on a website, it's in the public domain. If it's in the public domain, it's GDPR exempt. So. Yeah, I don't see GDPR affecting us. I don't see it slowing us down. I see us as a B2B economy, and I see the data sets we have available to us just growing daily.
Thanks, Keith. I guess the people that I know have the same reaction as you, basically, when it comes to cookies and whatnot. So I don't have the hardcore data, but based on my own sampling, it seems most of the people around me just move on. Yeah, so. I guess on the pro side, I mean, they've got your data, so you might get a birthday card on your birthdays, yeah. But anyway, Kweku, I wanted to go back to you because Obviously, you've started in Ghana, you've moved to Nigeria. We're going to go back, we're going to go into funding, but I wanted to understand, I mean, when you started on your side, how did you finance your initiative and how did you raise money in Ghana? I mean, what has been, how easy or difficult has it been to raise money?
Yeah, actually, the company started operating in Nigeria first, and then Ghana. But yeah, I mean, fundraising has been interesting. I myself put some money in as well as a founding investor as well, and that was typically the way we sort of raised capital at the beginning. It was from angels, so family offices and sort of friends and family that put in capital in just understanding sort of, I guess, the opportunity therein, and also as well, I guess with some of the family offices as well being perhaps slightly involved in these sectors as well, or looking to sort of bet on the markets, right? Nigeria, Ghana, South Africa, sort of understanding the opportunity therein. I can't say it's been a sort of an easy, it's been easy raising capital for this particular sector. And for me, it was, I guess, quite baffling on my end because I put money in quite instinctively because I understood the opportunity on the continent quite a bit. Just for your reference, I did live in. Sorry, there's some background noise.
Sorry, yeah, somebody needs to put on mute. Yeah.
Yeah, no problem. So yeah, so I did live in Canada before I lived in Toronto. There's a company there called TerraNet. For those out there that don't know, it's a private company that signed a PPP with the province of Ontario and basically digitized its land registry system. And I lived in Toronto. Toronto has the fastest growing skyline in the world. One of the reasons for that is just because it's such an efficient system. It's just easy to understand where the data is in terms of for a builder. Okay, where do I build? Okay, I can see the data. This is where people are moving to. I build there. Or even for a buyer, the system is so efficient that it makes it quite quick and easy for you to purchase a property. And you find that, and for me, it was very easy to see that. I personally believe that is the biggest issue on the continent, the land tenure issue. I mean, it is the number one issue at Constituent. I sometimes laugh when I think about sort of the impact investors out there and out there who don't sort of understand the impact that this particular our inefficient systems due to the colonial past, due to sort of inefficient governments today, whatever the reason is, these things have caused gigantic amounts of poverty on the continent, right? When you understand that if you don't own property, if there isn't that access to that information and it's not trusted and transparent, all you are bringing about is sort of endless amounts of poverty because people might sort of use the land, have the land, but don't have that ownership, can't get a loan from it, can't get a mortgage, can't get access to capital. And so it was that easy for me to understand. And I think it's easier maybe for angels sometimes to understand, especially those who are in there, in sort of working within that space. And so that's how we got the initial funding. We have been able to get some VCs to come in as well. Keppel and others as well have come in, but we've still seen strong angel investment as well, right? And so you find that maybe because obviously the space is quite nascent, and because it is Ghana, maybe because it is Nigeria, that there are some that are a bit wary of a new space within markets that perhaps they are wary of or don't understand. But the opportunity to me for any impact investor out there, it is so large, it's so sort of life changing that it was easy for me to understand. I think for those within the space, it's easier for them to understand as well. So I implore, I guess, more of those in within at least the impact side and the angel side to come into this space, and especially those that are working within the space as well, either maybe on the banking side or on the property development side, legal side. Those are understand it to especially sort of put some capital in, because I do understand on the institutional side and so Keith mentioned it quite clearly that for most sort of institutional investors, for them, there has to be some type of, evidence based or plate. And so for them to put capital in at the early stage, or to put capital into a space that is quite nascent, at least in the continent of Africa, for them sometimes it's a bit hard to do, because it's someone else's money as well, and perhaps as well the money has to meet specific guidelines or strict protocols before they can put in that capital, right? So I do understand them a little bit, but for me, the opportunity is so vast. It's so easy for me to understand that sometimes I can't lie, it does baffle me that others don't. Are you on mute? Sorry, you're on mute.
Yeah,
you're on mute.
Sorry, apologies. Yeah, thanks. Still getting the gist of it. Yeah. So you can figure which generation I belong to. Talking about these angel investors, yeah. Are these people who are basically just giving it a punt, or do they understand the tech side of it, the data side of it? Are they sophisticated, or are they basically cash rich guys who basically saying, okay, I'm putting $50,000 or $100,000, no big deal. What kind of people are you meeting these days?
Yeah. Well, I think it's a bit of both, right? It's a bit of both, right? So, a lot of players, the angels, so these are mostly family offices that have made their wealth on the continent, and so are comfortable with, with dealing with the issues of the continent, right? And so maybe perhaps may not fully understand the tech, may not fully understand the tech side of things, but do understand the opportunity and have already sort of discounted the challenges of the continent, right? And so understanding that and also as well are worldly, in a sense that they understand what's going on outside of the continent of Africa, and so understand what's not being done today. And for me, like I always, people always say, oh, can this tech work here? Can this tech work in Africa? And it's always interesting for me, because I'm using an iPhone right now. I'm pretty sure a lot of people are using iPhones right now, right? On the continent of Africa. This is sort of some of the highest tech out there. It's being utilized here today. So why can't blockchain or AI or any other sophisticated tech be utilized here? Obviously, you need to adapt it in a way. And on the business side of things, I think more so than anything, you need to adapt your thinking. But definitely, all of these things can work here. And so, for me, it's easy enough to see. I think it's just about making sure, and I like having the family offices on side, because they have the network as well and can assist you with the human elements that are there, and those are part of the challenges, the human elements of all of this as well. And so having them on side typically sort of works well for you in the long run.
Great, thanks a lot, and Kweku. Kumi, I could see you nodding quite a number of times, so maybe you wanted to add something about the funding aspect. What are you seeing on your side?
On our side, like we have a peculiar story, because we came from a point where we were we came off from a conventional real estate company. We decided that okay, fine, that we needed to build technologies to improve the real estate company that we were in, that we are working for. And we found out that we bootstrapped for about a year or two in building this technology. And we realized that in bootstrapping that we could commercialize these products that we have used to digitalize the company that we are running for. And we decided that, we're going to put it out to the market and see how the market takes it. Right now, we're seeing some traction. And obviously, this traction leads us to knowing that there has to be some funding for us to scale up and do expand. And again, like there are several technologies that we didn't even think that were going to be adoptable in Nigeria that we're even looking at, and we are seeing massive interest in. One of the areas we're even seeing are areas of IoT sensors, where people are now looking to spend less money on regular large BMI systems, rather than trying to see how we can use sensors to actually do the same functions and make the conventional legacy buildings sentient. So with that, we are seeing opportunities where we can even grow larger, imbibe more technology, scale down the price of technology of these technologies, and increase efficiency, and ensure that obviously, and the efficiency we're even seeing is that our consumer base or customer base are looking to reduce their operational costs as opposed to increase costs. So we're in a very peculiar position where we are seen as cost savers as opposed to being income generators. So there has to be some type of VC who's interested in scaling that, and also seeing a way where we can even democratize that to make it a simpler form so that regular people can begin to see the use cases for these technologies. So so we are I think funding is going to be a huge aspect of this, and we encourage that investors, even though they're interested now, we see that we need to expand on the way investments coming so that technologies can easily be readily available, and we can start we can start expanding at scale.
Sure, thanks, Makumi. Keith, I know you've been in the game for quite a long time. I mean, you've built businesses, you've sold, you've reversed, listed, etc. Keith, what are you seeing from a funding side? I know you've done quite a bit of work lately in terms of mapping out investors, etc. Because this is the thing, back in the days pre-technology, it used to be putting a business plan and then you go on road shows and it takes like 2 years to raise $10. Yep. I mean, what are you seeing today? How do we get the African Proptechs to meet with investors, whether locally, regionally, from South Africa or from other parts of the world, or what are you saying as we speak in 2021?
So just first thing on context is in global terms, the number of the businesses starting, about 1.5% get invested. So in Africa, I think we're sitting we're below 1%. So just in the context of the market, less than 1% of our businesses get invested is the first one. The second one is the VC fund structure is not, it's designed to serve larger, better established markets. So if you just look at the fund structure, if you look at the management fee that the fund takes and the salary that they're able to take out of the fund, then dictates the size of the fund, then it dictates the ticket size. So most funds launch, and then the ticket size is set by the size of the fund, by the management fee that they're allowed to take off the top. And then most of the traditional structured VC funds are doing between 3 to 5 deals a year, and the ticket size is fixed. So that's a normal run rate for the fund. Now what we're starting to see in Africa, and it's just the data's only starting to come through now, is we're starting to get a new an African investor. Now, when I say Africa, I know this is just I'm going to exclude South Africa, because we're always in this sort of bubble that's digitized and developed, and then there's the rest of Africa.
I call it social distancing.
Yeah. So I think the African funds are going to just change the market, and what I mean by that is guys like Keppel. So if you look at what Keppel's done and the size of the portfolio and the amount of deals that they're doing, they've got a portfolio that's sitting around 70 businesses already. They're doing a lot of deals quite quickly. Now you got Launch Africa, you got Baobab Circle that's coming. You got quite a few, but they're only starting to really get momentum up and running now. And they're writing checks a lot easier. They're not traditional VC fund structures. You don't have the GP, LP, IC approval processes. You don't have to go through this whole process. It takes you typically about 9 months. The fund, if you go to a fund and say how long it's going to take, they'll tell you 6 months. If you get your money in 9 months, you're lucky. So those processes are starting to collapse. And we're starting to see checks come faster, and we're starting to see the smaller checks come, which is actually what we need. What we need to change the economy here is we need a lot more checks at a lot smaller value to allow the businesses to lift and show the value. They must create the value that, take the check, show the value.
What are these smaller checks? Quantum? What are you talking about?
Anything from $25,000 to say $200,000, maybe $300,000. So that kind of check size is typically where we're seeing the gap, but it's also where we're seeing most of the growth, and the quick checks. Meet the team, get to know them. Don't spend 6 months doing a DD. Write a check, take the equity, and then watch the business. See how they go. And it's a spread bet. But it's so we're seeing those kinds of funds are going to, I think, are going to succeed very well in Africa because they're market appropriate. So the traditional VC funds, fine for later stage, and I don't think there's any shortage of this. I don't know. I think there's one launching a week at the moment, and they're all coming at Series A, Series B. Some of them are coming sort of pre-A, but not much pre-A. So yeah, so we sort of see those coming, and all of those businesses that are applying for that funding are getting invested. But that's not what we need. We need systemic lift. We need to create 100 or 1,000 businesses. We need to lift 1,000 businesses a month. I mean, that's really so. SW7's goal is we're building a platform, and our goal is to accelerate hundreds and thousands of businesses at the same time across the continent. And that's really what we've been doing for the last 5 years, is trying to figure out how do we do acceleration at scale. And if we can lift those businesses at scale, we actually create an investable market. And then the checks will start to come because the data will be there. So yeah, so what's going to lift us is more checks written faster at a smaller amount, spread across the markets. Because as soon as you go down the market, there's just unlimited. If you look at our established economy, South Africa is very mature, and Nigeria is kind of booming it's fragmented, but it's growing quickly. As soon as you go down in the check size, there's very little difference between writing a $50,000 check in South Africa and a $50,000 check in Kenya and a $50,000 check in Kenya and Ghana. They're all early stage businesses, and they've all got the equal opportunity to scale, and it's based on the team. So as soon as you get a smaller check, you kind of democratize innovation across the continent as well, and then the money won't be playing into the safe economies, if that makes any sense. It'll be playing everywhere.
Yeah, no, agreed, totally agree. I mean, again, it reminds me of the private equity days of 15 years ago. People came in and they went for the $100 million type of deals, and there were so many deals available there, sub $10 million, and very few, if any, actually invested in that. And the few that did were localized private equity firms, basically, i.e. a private equity fund in Kenya, investing in Kenya, for example, raising local money. So I think there's some kind of similarities there. But just on that 25 to 200K, these are investors who are looking basically to come in, loan the money, or buying into the equity most of the time.
No, it's those equity. I haven't seen. In fact, we're accelerating. Funny enough, two businesses in our community are loan businesses, and they're actually running great businesses. They're loaning, but they're loaning at a slightly later stage. They're loaning to bootstrap businesses at a slightly later stage, but they're showing great returns and they're showing very low defaults. But no, and I don't think early stage. I don't think a debt in the early stage is a good thing, because it's you don't have free cash. I mean, you just aren't going to have the cash to pay the debt. It's not for the first 5 years. It ain't going to happen. You're busy trying to pay the bills. You're trying to get everybody. The first goal is to get the whole team to a market-related salary, which typically takes 3 to 5 years before you're paying a market-related salary to the team. So if you load a debt into that kind of business, I think it's too hard on the business. Certainly after 3 or 5 years, the business can probably manage the debt.
Yeah, no, great. And maybe before I move on to Accra, one more question to you, Keith, before I move on. So for me, okay, the investors, I mean, you're doing this sort of matching, etc. So you're talking about $25 to $200, $200,000, funding. You're talking about more deal flows, 1%, of deals actually to be done. But then from a Proptech perspective, the younger entrepreneurs who are doing stuff on the ground, starting something in the bedroom or in the garage, etc. What do they need to ensure that they can attract capital? What would you say? I mean, is there sort of a recipe to it?
So the Proptech market is asset heavy, and it's a slow moving market. So like every market in the world moves at the pace that they have to move. Retail moves quickly because I put up a seasonality, I put up stock, my stock's gone tomorrow, and I need to put stock. So the market turns quickly. If you look at retail, I've got an asset. The asset takes months. It takes years a long time, or months to build. It takes a long time to sell. And when somebody buys the asset, they keep the asset for a long time. So it's a slow moving sector. So they're not used to change, and they're not used to embracing change. So the sector doesn't change that quickly. So the first thing an investor is going to say is can it scale? So convince me that your business can scale. So show me the size of the market. And the first thing is, and the problem with one of the problems with Proptech is because the asset is obviously location fixed. a lot of the regulation and rules and processes are also location-centric. So then if I take a solution for one market, sometimes it doesn't scale to the next market. So the investor is going to say, prove that it can scale. How are you going to get customers? So show me the way that you can acquire enough customers. So if I write a check for you, I want an evidence-based report showing me that you've run a bunch of experiments on the customer acquisition, and if I take $20,000, I can go and actually turn that into $20,000 a monthly recurring revenue. So show me that it can scale. So give me the data, and then thinking ahead, if it scales, how do I scale it beyond the region I'm in? So convince me that this can scale to other regions. So and those are all income statement related. Just show me that the stuff can sell and sell quickly. And that's really that's the ticket to the investment is showing the customer acquisition strategy, showing the customer acquisition process, and then showing that it can port to other markets.
Absolutely agree. And which brings me to the next question to Kwaku and Keith. I mean, either you've been reading my mind, I'm worried about that. I was asking about scaling. Your business you've started in Nigeria, in Ghana. I mean, obviously, I'm sure there's sufficient action in those two markets, but what about scaling beyond the borders of these two countries in West Africa? What's your plan, Kwaku?
Yeah. I mean, excellent question as always. So it's the same plan we'll utilize from going from Nigeria to Ghana, and as well, actually, we're also in South Africa as well, which is, we typically want to utilize the strategy of a property developer. So a big enough property developer who has enough units out there. So let's say 1,000 units or so. You get it, or so let's say 100 or 100 up to 1,000 units, or you get one or two or three of these, and then you're already sort of in one market, already capable of doing enough business there. So that's why I like Keith mentioned, the B2B strategy as well, B2C, and that we're really a B2B2C business. And at the core is as the developer at the core of the, or a bank as well, or sometimes as well a legal firm as well. But I think the developer is really the core strategy to move forward. In fact, we're looking at Kenya right now. We got one developer to come to us right now, actually, that wants to work with us in Kenya. And so we're looking at that as well. I want to that's probably the next market we're looking to push forward in as well. And then maybe at some point begin to look at even some of the Francophone markets as well. But that's how we found to be sort of a good strategy to target those. And even with respect to expanding as well on the marketing side. So how that Kenyan developer came to know us was we've been utilizing influencers as well within our marketing as well. And so on YouTube, we do with some of these influencers, you do one video, you can get about 400,000 views on one video within sort of a 2-month span. And so that has been actually quite good as well in expanding our brand awareness as well and moving us out there as well. And so that type of strategy has really sort of focusing on the developer and making sure the marketing efforts as well. Obviously, Google Ads, Facebook ads can be utilized as well. But we found maybe the influencer side as well, especially when it's targeted and done properly using the right people, also gets you the right customers, so paying customers to buy properties, but as well even the developer side as well, and others as well, sort of who are interested in the space and around it. So that's what we found to be the strategy. We're focused on Nigeria, Ghana, and South Africa, and I think Kenya will be the next one. And we want to make sure that we're quite strong in these markets before pushing forward. And obviously, maybe after Series A funding will obviously help us expand quite further than that. But that's what we found to be the model. To focus on those on the business, on the B2B side, and once you sort of get a developer with you and developers with you, you can quickly scale from there.
Thanks, Kwaku. I mean, it's interesting that you're going all the way to East Africa. Obviously, Kenya is a major country on that side of the continent in terms of real estate development. It's probably the biggest, if we exclude Ethiopia. But interestingly, what about left from you? Côte d'Ivoire. Yeah,
no, 100%. I wish my French was much better as
You
well.
just Google
It was much
Translate.
better. Yeah, fair enough. Yeah, Kevin. My French was quite good before about 10 years ago, and then when I went to Canada, I thought it was a bilingual country, but Toronto very English speaking, so lost a lot of that. But certainly 100%, you're right. Ivory Coast is on our mind. Ivory Coast, Senegal are two countries that we're looking at quite deeply, and probably after Kenya, we'll probably look at those two countries, especially quite a bit. We want to make sure as well, obviously, that we have the right team for it, because you do need someone to lead that as well, lead that operation. You would want that person to be obviously very French speaking and maybe have some good connects there. But those are countries that we've looked at quite deeply, and I've had many different discussions with stakeholders there as well. And so we'll definitely move in there as well. And we just want to do it right. And obviously, as a startup, you have to manage your resources, and so English speaking for now, but definitely the Francophone market, especially for me, very interesting.
And your current investor base, so they're going to basically follow you on in terms of the investment, or do you have to raise money from other investors for the expansion?
Well, obviously, always the hope is for follow on, or as always, and so we sort of continue to have discussions with our investors, and some of them are obviously quite keen. I will say, obviously, the one negative sometimes with angels is that angels will put it in and then at the beginning perhaps, and then will then want you to get the traction from the VC side as well moving forward, and so which is understandable as well. And then potentially if the VC comes on, they will then sort of follow that VC along with their investment, right? So that's typically how you see things, and so a lot of them potentially will follow on from there in future rounds, and so that's how we sort of are viewing it, right? And as well, my hope is that we don't need the VC as much, or we don't need as much capital from them. Really, the business sort of pushes on from there, and really we're expanding through our own revenue source. Right? That would be my sort of blue sky.
Yeah, great, thanks, sir. Quite cool. Mukumi, I mean, we're almost at the end, but of the session, it's been interesting to understand what's been happening on the funding side and also the value of data. Obviously, Mukumi, the future. I mean, the future. We're not talking about 10 years, because these days the future seems, gone are the days of 10-year business plan or 30-year business plan, etc. So, in terms of the near future, what are you saying? I mean, what should we do, or what can we do, or what should we do to facilitate investment into the PropTech sector?
Yeah, so like I said earlier, I think we need to be more connective or more collaborative in the way we build products. I think Keith mentioned something about accelerator program for about 200 companies. Oftentimes we see that in PropTech, especially in Africa and Nigeria, people are always working in silos. You hear this company is doing this, you hear this company is doing that. Oftentimes you might have companies doing exactly the same thing and they know nothing of each other. So I think there has to be a more collaborative effort in knowing where products are heading, and also where VCs are most interested in, or where investors are most interested in. You would see, I think there was a survey from like Deloitte in 2019 where investors are more interested in content and PropTech, smart building technologies. Technology that generally affects the growth of making architecture easier, space planning tools. These things are very interesting to VCs because they are easily profitable and sustainable, and they are also easily adoptable. So products that generally disrupt the current climate or the current landscape of which business is being done are products that are generally encourageable to build on. I would say, for instance, in Nigeria, we do have an infrastructure. In Nigeria, we have an infrastructural deficit. And I think, for instance, like products that have to do with ensuring that there is a high level of accountability across the maintenance chain, or the supplies of this particular infrastructural amenities, are products that would be essential in the near future. Near future, I'm talking about 1 year, 6 months to 1 year. So, so these are products that are currently gaining traction in the market, and I feel like if more players are beginning to see this as opportunities, I mean, it's a two-pronged approach. There is profitability, and there's actual improvement of infrastructure in Africa that can be gotten from these collaborations moving forward. So, like you said, like if smaller amounts of money are being presented to a lot of companies that have these ideas, there'll be a faster growth rate as opposed to having a monolith who has all the money and is trying to do everything all at once. So yeah, thank you.
Yeah, great, thanks. Keith, I mean, some of the young entrepreneurs, if I can put it this way, on the continent that I've come across, youngsters who probably finished university, went into corporate, left corporates 2 or 3 years later, and came up with a couple of ideas, ideas that make total sense, that maybe people in the corporate world either haven't got time to think about because they're so busy with their core business on a day-to-day basis, or they just haven't thought about it. Now, the thing is, beyond coming up with an idea, beyond like putting a team together and building the thing, can somebody raise money without putting in money if somebody doesn't have money? Are you seeing any of these, or are these wishful thinking?
I see some of them, and they're the exception, not the norm. So there are this. I've got a PowerPoint and give me lots of money. We tend not to work with those businesses because we kind of, our community is a community of sort of founders and CEOs that have lived through the school of hard knocks. They've bootstrapped, they've spent their money, and so my first thing as an investor, I'd look at it and sort of say, well, if you haven't invested anything, why should I? And when I say invested anything, what if you sacrificed? So what did you personally sacrifice to make this succeed? So if you want to launch a world-changing business and get a full salary while you do it, me too. Doesn't quite work like that. So what we look for is have you latched onto the customer problem statement? So the absolute focus of the small business is, what is the problem you're solving for the customer? Just fall in love with the problem that you're solving for the customer, and then if you do that, you'll actually make a lot of sacrifices along the way. We talk about Kunmi sort of talks about bootstrap for 2 years. He's put skin in the game, and he's made a sacrifice. And if he's prepared to invest his energy and time into growing his business, then investors should be as well. So I think there's a lot of focus on funding. I don't think a lot of it's that. I don't think it's healthy. I think the focus should be really on the customer problem statement and really delivering value to the customer. And I think if you just focus on that, funding will come as a consequence of you focusing on the customer problem statement. If you focus on funding as a success metric or as a benchmark, you're going to get the check, and then you're going to burn most of the check and actually not have a product market fit. And we see that all the time. So if the business gets funding early on, they go charging off in a certain direction, and everyone on the call here who's built the platform knows the only guarantee I have is whatever you build won't work, and whatever you think the problem is not the problem. And as soon as you start launching and scaling, you start to change what you built, you start to rebuild it, you think what the problem is, and then the problem is actually slightly different, and you end up you get close to the problem, and that process is the drunken man's walk, the messy middle, the valley of death. There's all sorts of names for that process, but it's an indeterminate process that's horrible, messy, hard, but you have to go through it to get value. And when I say value, not a check, the value is value for the customer.
Sure, absolutely. And maybe the last one, Keith, for you is crowdfunding. How can we raise money from people who might just throw in $1,000, $2,000, whatever? How can we do that? I mean,
so
this is being done elsewhere. Yeah.
So let me just I'm going to set a benchmark for you. So typically when you crowdfund, I'm going to benchmark. I don't know if you know Crowdcube. I think Crowdcube are the biggest in Europe. They're biggest in the UK. when you go to crowdfund, you normally raise 60% of the money before you go to crowdfund. So if you're raising $1 million, you've raised $600,000 already. You then put that $600,000 as a foundation into the crowdfunding platform. You pay the crowdfunding platform 6 to 8% of that to put the money that you've already raised onto their platform, to attract the $400,000 on top of that. So when you ever talks about crowdfunding, they sort of think I come up with this idea and everybody just gives me money. Most successful crowdfund raises are 60% already raised. The concept's already proven, and you're raising the top up. So most crowdfunding platforms actually evolve into market makers. So do you remember? You must follow Indiegogo. You know, Indiegogo. It's all cool toys. It's like if you got on their mailing list, all the cool toys in the world are Indiegogo. Now they started out as a crowdfunding platform, but actually now they're a market maker. They're a mailing list. You don't actually go on Indiegogo to raise money. You go on Indiegogo to sell your stock. You put your product up there. They've got such a reach that people come along and say, "That's cool. I'm going to buy one." So that you're pretending that you're going for investment, but actually what you're doing is a digital marketing channel. So a lot of crowdfunding platforms end up as profile generators. So what they'll do is they'll say, yeah, you might get your money back. You know, if you've got $600,000, you want to raise $400,000, we're going to take 8% on both sets of that. If I can raise a profile of your business in the community somewhere, you may get another return. So crowdfunding, so that the benchmark I use is the penny share market. If you're familiar with the penny share market in London.
Yep.
It's a massive market. All these people sitting at home in their slippers trading. Now, if you don't have a penny share market, I don't think crowdfunding, because a penny share market is an indicator of highly disposable. It's discretionary spend. I'm kicking around. I'm sitting at home. I'm bored. I've got a bit of cash, and I'm going to go and have a little bit of a dabble. Now, crowdfunding conceptually is the same thing. I need to be sitting at home with disposable income, and I need to decide I'm going to spend it. So if you don't have a penny share market in the country that's effective, I don't see how crowdfunding in that particular region can live off. But then the flip side, of course, is if you're in Africa, everybody in the world wants to dabble in Africa. So you can go to Crowdcube and you can go to the big offshore platform guys. They'll only accept you once they know you'll succeed. So you only get accepted onto the platform once they know that the fundraiser is probably going to succeed, because they won't take your campaign if the campaign's likely to fail, because they want success and they want to make money too. So if they look at your campaign and say, I don't think this is going to work, they won't accept you. So, but
Keith, on that, I wanted to ask you a different one on just on that one, on the crowdfunding. For example, you talk about the penny shares, etc., which is a great example. Is how could we, for example, guys who've got like $2,000, $1,000, $5,000, who might say, listen, I haven't got the expertise, I haven't got time to go and look for it. I just want to put my money into a fund, and the fund manager will do what needs to be, or a VC or whatever that's going to do it, basically. So you empower in a way, or you democratize investment flow into.
It's. I think it's going to come. We've had three, I think, in South Africa that have tried to launch. And what they've tried to do is to create a security class that's an accessible security class. The problem is showing the investors is explaining to the investor what the returns are likely to be, because you don't have the data. So it's kind of a chicken and egg. If I take the asset class, if you make it accessible, you're creating an asset class. If I'm choosing the asset class, I'm accepting the asset class as high risk. I actually want a high return for that. So give me the data to show me that if I put in $2,000, I'm going to get a compound 30% annual. Because if I go for high risk, I want a higher return. And I think a lot of the funds don't have that data to validate their case. So I think it'll come as an asset class, but again, it's I don't know that it's the right vehicle, because it's the admin fees on top of admin fees on top of admin fees. You got compliance structures, you got a compliance offer that you need to do. Before you start trading, you've got a team of 3 or 4 people that are just sitting there doing admin, and then you've got your compliance license to pay for. So I think it'll come as an asset class, but it's the cost, the barriers to entry are high, and the success is unproven. So South Africa, you guys are familiar with Easy Equities. Easy Equities almost created the penny share market for us. So they're a market maker. So they didn't exist before. Now they've democratized access to stock, and now it's expanding into Asia. But they're a market maker. Yeah, I think we're a while away. It may come eventually. I'm not sure it's the right vehicle. I think there's better ways to do this. I think there are better financial instruments to do this that are cheaper and easier and more accessible.
Thanks, Keith. Interesting. I think that this is, yeah, as you say, basically there are other ways to do it. I think what's important is to have more money to be deployed on the continent in Proptech. I mean, you've talked about the $25,000 to $200,000. I mean, Kweku, I mean, you've talked about your initiatives in West Africa, and then you're going beyond West Africa into East Africa. So all the best for Kenya, which is a great market. I'm sure it's going to be awesome for you. And hopefully when we talk next year, well, hopefully we talk before next year, but if we do talk next year, you will also be in Cote d'Ivoire and Senegal, next door. And Kumi, great to hear from you as well, your experience of what it has been in terms of interaction with people in the brick and mortar space, the hurdles, the challenges, and then more importantly, the fundraising space as well. You know, so I think we are seeing improvements. We're not there for sure. Hopefully we should see more investors, whether it's locally, regionally, or even global investors. You know, why not global investors who have invested in other markets that have seen how other markets have developed, like in Asia, for example, Southeast Asia, or LATAM, for example, you know, might say, hey, let's take a punt in Africa because it's going to happen. You know, it is happening, by the way, not that it's going to happen. So on that note, thank you to all of you, all the panelists, Kweku in Accra, Kumi in Lagos, and Keith in South Africa. Thanks everybody who've been watching us. There's been quite a lot of questions. I've tried to sort of fit it in, but time constraints. So I'm going to lead on to Kafir, I think, is going to take over from AP. Thank you, everybody. Kafir, who's in Lusaka.
Thank you, Kevin. Great session and invaluable insights. Really thought we covered a lot of ground in terms of both the funding side as well as also from the startup side, you know, raising funds as well as those that are deploying, and everything in between. So I think there was a lot to take forward from the session. So thank you, Kevin, for moderating and putting forward the questions and really just navigating the panel. And thank you to our panelists as well. Also, once again, great insights. Nigeria, Ghana, SA, Mauritius, great viewpoints. And I think we're still at the very beginning. And Keith, I think you made some very good, or gave a good perspective from an investor side of things in terms of scale, on a B2B focus versus a B2C focus. And yeah, I think these are all great points that we can take forward with us. So yes, thanks everyone for tuning in. Thanks to the panel. Thank you, Kevin, for moderating, to our partners as well. And we will continue the discussion. We'll take the notes from here, and hopefully evolve the session. And next month we'll have another episode as well as some other things happening off the platform. So thank you, everyone, and thanks to the panel.
Thanks, guys. Thanks for having me.
Thank you.
Thank you.
Cheers. Bye-bye.
Cheers. Bye.